Welcome back everyone to another Forex analysis video. The first pair we have today is the Canadian dollar versus the Swiss franc. So if we see the price action, the recent price action in this pair, we can see that it has been around a stagnant to bearish price action. Now if we switch back to the 4-hour time frame, we can see that there is a formation of lower highs and lower low with a neckline breakdown, and after that we can spot a kind of bearish flag and pole pattern. So what we can do is, as soon as this last swing is broken, we can short it and have our stop loss above the breakdown candle, and our first target should be this tip of the pole, and our subsequent target can be found out with the supports. Like this can be a target and this can be a multi-week target. So the maximum risk to reward ratio which we can obtain here is around 1:10. It might vary up to 1:8 also. So the next pair we have is the Australian dollar versus the Japanese yen. If we check this pair on the daily time frame, we can see that it is going bearish with some higher lows and lower high formation, and also traveling in a channel pattern, and the current price is trading at around the upper ranges. Now if we go down to a lower time frame of 4 hours, or we can go down to the 2 hours actually, we can see that on the last trading session, it formed a bearish candle right here. So what we can do is, if it gives a breakout from here and then retests, we can enter at position at some point like this, and our stop loss should be well below the highest volume candle of the previous timeline, and our first target should be at least 1:1.5, and subsequent targets can be taken from this swing highs, and this should be our ultimate target for the bullish side. And for the bearish side, what we can do, as soon as the price break down this last swing levels and then sustains itself, and then we can go short from this position around here. Our stop loss should be above this swing level, and our target should be this subsequent lows. Also what we can see here is, there is a very important resistance zone right here, right about this point. So what we can do is, if the price breaks these resistance levels and gives a candle closure, we can just pull our trail our stop loss and try to achieve these targets, because by that point the price will be very bearish. So that's all for Australian dollar versus Japanese yen. And the last pair we have today is the Canadian dollar versus the Japanese yen. So those two are actually correlated. If the Australian dollar and Japanese yen is weak, then the Canadian dollar and Japanese yen will be weak as well. So if we see the pattern right here, we can spot that it has been trading between a very narrow range, but currently we can spot some exhaustion right here. This was a bullish candle, this was somewhat bullish candle, then a bearish doji formed, then another we can say like it was an M pattern kind of candle, and then there was an exhaustion. So what we can do is, as soon as this breaks down below this point, we can put a stop loss around this point and try to take a target of up to the lower range. And just in case the market opens a bit bullish, then we can wait for any kind of reversal pattern shown right here, like a double top or a triple top or something, like any kind of bearish reversal candlestick pattern like an evening star, and then we can short it for a greater target. So that will be all for today's video. Thank you.